Hi everyone, and welcome to my February dividend portfolio reveal. In today's show, I'm going to be discussing my 3 new exciting stock purchases. But first, just a quick update. So I'm finally using Snowball Analytics, which has some fantastic charting and data, which I'm excited to show you all today. Now, I've still not managed to successfully transfer my stock portfolio from IG Trading to Trading 212, which is what I want to do. I want to consolidate all of them across one platform. So I'm currently split across 2 platforms, but luckily for me, I will be able to show you this, but all my holdings across both portfolios just through this analytical tool of Snowball Analytics. So for the purposes of this video, it'll all be in one place to show you guys where I'm up to. So let's take a look at my portfolio. Let's start with the overall value. It's currently valued at £54,887.36, with my original investment being £45,320.73. So overall, I've got a £9,566 profit. Now, I'm not too fussed having this type of profit with me being a dividend investor. It's nice to see that I'm in profit. Obviously, it's better than a loss, but ultimately, I am focused on what I will be earning in the long term. So my first new buy is insurance group Aviva. And as you can see here, I've taken a stake of £1,194 for a total of 185.98 shares at an individual value of £6.42. Now, one of the main reasons I bought this share is the very attractive yield of 5.75% on cost. Now, this company, it's on track to hit its 2026 operating profit of £2 billion. It has recently also acquired Direct Line, and it's looking to streamline this part of the business too, which seems to be going well. They've made a lot of cost savings as part of that new acquirement, so that's looking good. Overall, they have 25 million customers across a broad range of products, as well as disciplined underwriting, so they're not losing that much. And I think for the long term on this one, it will be a great acquisition. The dividends will grow, and I'm sure at some point that I will look to purchase a lot more. Now, for my second purchase, this was Lloyds Banking Group, where I spent £1,094.50 for a total of 1,028.18 shares. And if you look, that's the crazy decimal number there of what I actually own. And this is on a cost basis of essentially £1.06 per share. Now, this stock for me currently has a dividend of around 3.43%, which isn't the greatest, but I wanted to diversify my portfolio a little, and I like what Lloyds have been doing lately. They've also announced, quite importantly, a £1.75 billion share buyback programme, which I think that over the longer term will add value in terms of both a higher share price, but also, just as important, they'll raise the dividends with this too, as there are less shares on the market. So I think that yield down the line could be 4, 5, 6% for me, based on me just continually holding. Lloyds is primarily a British-focused retail bank, with things like mortgages and current accounts being their main focuses, which I think this provides the bank in particular a layer of insulation when compared to other banks that have heavy investments abroad. So if there's another huge global financial crisis, hopefully there isn't, but if there is, I'm hoping that Lloyds will be a little bit more protected and a little bit more insulated than they were in the past. Obviously, they had to seek a bailout from the UK government. Hopefully things like that won't happen again, but, you know, this is why you diversify. And for my third position, if you remember, not that long ago, I grabbed a £500 stake in Admiral. Well, I've increased that position in the company. So I've spent another £1,393 across 49.4 shares. This means that my overall position now in Admiral stands at 67.58 shares with a yield on cost of around 8.44%, which I think is absolutely amazing. The average cost per share for me stands at £27.97. Now, Admiral have a great track record of raising dividends, and they also have strong capital levels as well as profits. The company payout ratio is pretty stable, and their return on equity is often 50 to 65%, which is way above their rivals who often are around about 15 to 20%. And just as important, these three new additions have also affected my expected dividends for the entire year. So now let's take a look at that. So now my expected dividends annually are going to be £2,896.30, which translates monthly roughly to £241.36. If any of you have watched my previous videos, you'll know that £240 was my milestone for the entire year of 2026. So I'm really happy with this progression. I'm actually beating my own targets. Now I'll try and push on as hard from here and continually accumulate where I can to see how big I can get this bad boy portfolio by the time the year is out. My yield on cost is a pretty decent 6.39%, which I'm happy with, and I think over time that this will just grow and grow. If you take a look at this pie chart here, this is probably my weakest area. The fact that legal and general account for 37.2% of my dividends. And it's not that I think that my position in them is too big, it's that other parts of my portfolio are too small and are lacking. So my current goal here, my future looks like to expand out the other sectors, diversify a little bit, and increase ownerships where I can to balance out the portfolio to make sure some of these other areas really increase also. So now let's take a look at my expenditure list to see where we are. So now I've updated it to the sum of £241.36. So this now covers my petrol consumption for the month. So as you can see, my haircut, my road tax, my contact lenses, my gym membership, my mobile phone data, building and contents insurance, internet and phone line, and as of recently, as of the current projections, my petrol consumption, all of these things now are potentially covered for life just by my dividend payments alone. My goal is to have all my outgoings covered and be able to live my life as free as possible, so these milestones are going great for me so far. My next one to cover will be my car insurance. Now that number is a little high there. That's because I was in a crash not that long ago, so I'm expecting that to come down. So come renewal, that could even drop to maybe £70 or £80. So that'll be even more achievable the next time we look at this sheet. I will, however, in order for my dividends to jump up an extra £100 or maybe even £80 per month or so, I will need to invest quite heavily for that. So that's probably nearer the back end of the year, maybe even going into next year when I'm available to cover my car insurance as well. But nevertheless, that's my goal. I'm working hard towards it. And as you can see, it's quite visual where I'm going. Not that long ago, I was up here, I was only really covering one or two things per month. And now look at all them things covered. It's quite easy to see where this is going, because once these are covered, then we'll have probably spending money down here. And I'll be hoping to get a couple of £100 per month spending money to make my life that much easier. Snowball Analytics has this really cool feature on this page, and this is where you can set future goals for yourself. So I've decided to give it a go. Now I've set a pretty modest goal. So in 10 years' time, I'll be turning 50 years of age. And I'd like personally to be earning a minimum of £1,000 per month through my dividend stocks and shares ISA, which equates to £12,000 a year or £1,000 per month. Now this sum is based on me regularly contributing £400, and the way the models factor these things in based on portfolio growth and dividends, it's suggesting that I can achieve this in 11 years. Now you'll notice I set this out in 10 years, so the blue line here is what it thinks is what I set, and the yellow line is where I will need to be. So essentially, I'm 1 year out. It reckons I can achieve this goal in 11 years, 1 year later than I've specified. Now, based on how I've been investing and how aggressive I've been, I actually think I can bring this achievement a bit nearer. So that's my goal now. I want to continually ramp up really aggressively how much I can put in stocks and shares, how much I can get towards dividends, and the goal is to continually beat my expectations year upon year. I've set a fairly modest goal, and this is so that I can also live in between these things. I like to go abroad a lot. I like to travel, do other things, and still partake in life. I don't just want to put life on hold. So I've set a nice modest figure, but where I can, in the months and weeks where I'm not doing anything, I will look to put that money to work for me and build towards a fantastic dividend. So this is where I stand on this particular thing. On a side note, I want to show you this article. I found this interesting. So this is Meet the Future ISA Millionaires. How 78,000 children had their junior ISA pots filled to the brim. And this story is essentially noting that it's like kind of a record that 78,000 children are having their ISAs, and their allowance is £9,000, and they're having this filled to the brim by their parents who are looking to set them up long term. And as I discussed previously, the key to becoming a millionaire is letting your money work for you. It's letting that compounding take place. And the earlier that you start, the better that is for you. So it's fantastic news that these people are setting their children up for success by putting this money away, the maximum that they can, then have that money invested, and then just let that money compound. And you'll find that in their mature years, as those children grow, they will thank their parents for that. They will end up being potentially ISA millionaires with a lot of money, and their life will just be easier and easier. And for those that don't get to do it, there's never a time not to start. You're never too old to take your investment journey seriously. You're never too old to invest in your own future. So the best time is to start right away, guys. So I think this is interesting because it's fantastic news, and it shows that people are taking, your future seriously. I'm a big fan that my dividend portfolio will be my pension down the line. I would prefer that it's in my hands than the government's hands. The government has the ability to change the pension age at any time that they want, or to tax to high heavens what little pension that I do get, whereas the dividends are completely under my control, how much I invest in it, at what point I pull that money out. Like if I wanted to, I could essentially decide that I'm going to start using that money, whatever it may be, at 45 years age. Maybe I have a midlife crisis at 45 years old, and I've decided I'm going to go crazy and I want to spend that money. Well, that money might at that point be at £600-700 a month. So I then can use that £600-700 a month indefinitely, as much as I want, without actually, attacking the capital appreciation or lowering the stock. I can just draw that money and live life on my terms. And that's why it appeals to me. I don't have to wait for a government to hand it to me. I don't have to wait for a certain age, a certain threshold. I can enjoy this money when I see fit. It's 100% in my control. Obviously, the markets can fluctuate, but in terms of when I draw it out, what I do with it, that's my control. And that really appeals to me. And I think that should appeal to a lot more people too, really, overall. But I just thought that article was very interesting, guys. I thought it was worth showing you. So if you've stuck it out this far, I'm assuming that you too are a dividend investor. So why not share your portfolio and annual dividends expected for 2026? Maybe even share what you earned in 2025 to show how it's increased. As always, thank you for watching, and happy dividend investing, guys.